and welcome to Business It's More Than LLCs. On behalf of our president, Ron Busby, our board chambers, and our staff, thank you for attending. I'm Warren Richard Jr., outreach specialist with the U.S. Black Chambers Incorporated, affectionately known as the national voice of Black businesses. We represent over 140 Black chambers of commerce and small businesses across the nation and are founded on 5 pillars of service: advocacy, access to capital, contracting, entrepreneurial training, and chamber development. This webinar was crafted in collaboration with our chambers of commerce, providing technical assistance and resources to businesses across the U.S. with the U.S. Small Business Administration SBA Community Navigated Pilot Program. Thank you for assistance in developing and sharing this program. Our team at USBC, as well as our 20 Navigator chambers, look forward to being a resource to you and your business as you navigate through this journey. Before we introduce today's guest, I encourage you to drop your questions into the chat, and we will address as many as possible at the end of today's webinar. Today, we welcome Nellie Akalp. Nellie is the CEO of CorpNet. She has presented for SCORE National for the past few years, covering the topic of business entities. A veteran entrepreneur on the online legal document filing space since 1997. She has helped more than 500,000 small businesses and licensed professionals get their businesses and clients set up and running. She has developed a strong following within the CPA and small business community, having been honored as Small Business Influencer Champion and was named Woman Entrepreneur of the Year by the National Association of Women Business Owners. Today, Nellie will cover the differences between legal structures, the impact of funding opportunities, the liability risks and tax implications, the impact on future staffing needs, and much more. Nellie, welcome.
Thank you so much, Warren. Thank you, everyone, for having me here. It's such a huge honor. You did such an amazing presentation of me and my background that I don't really want to waste time going about who I am. But just to let you guys know, I'm honored to be here. I'm excited about presenting. And as Warren said, I am an entrepreneur and I'm an expert business resource for the SCORE community. And I've been blessed with the opportunity to do what I love each and every day, which is to educate entrepreneurs and small business professionals with all the ins and outs of starting a business, expanding a business, keeping a business in compliance, and helping them navigate all of the hurdles when it comes to running a business. As a result, and in being in this industry for God knows over 30 plus years now, I've had the pleasure of working with many entrepreneurs and business professionals. I've started and sold many businesses, and today I head the team over at CorpNet, and our company CorpNet provides legal filing services in all 50 states. And our mission is to educate, support, and teach entrepreneurs about how to start a business, how to expand a business, and how to keep that business in compliance. And we do this together as a partnership. So without further ado, I'd like to get into the meat of our webinar. For those of you who want to know more about me or get in touch with me, I'm all over the internet. You can follow me on all the different social handles. And also you can see a lot of my content on SCORE, and also a variety of different third-party outlets such as Forbes, Inc., Entrepreneur, Small Business Trends, and many other small business related outlets, including my own blog. So without further ado, we can go ahead, Warren, and expand the slide to basically what we're going to be talking about today, which is the basics of business entities. And our goal today is to really teach you guys what the different business entities are. And you can keep expanding. You can keep expanding to the next slide. I don't think I can do it, so I wouldn't be bugging you every time. But the whole goal and agenda of this webinar is to summarize entity options along with their advantages, their disadvantages, and their tax implications, outlining options on where to register a business, determining why entity conversions may be necessary if, for example, you have a business already and you may realize that, okay, it's time for me to change my entity. And then, teaching you guys the steps of how to actually start that business. And then once you are in business, teaching you a little bit about how to keep that business in compliance for years to come. So let's talk about the benefits of incorporating a business and the importance of business incorporation. First and foremost, the main reason why a person would want to form a corporation or an LLC, or let's say a corporation with an S Corp status, or any sort of a corporation, is it boils down to liability protection of personal assets. And what do we mean by this? We mean that when we're putting the business into a corp or an LLC, it's creating a corporate shield around us as the business owner. And by creating a corporation or an LLC, that business is now a separate legal entity, and it protects you as the business owner from having any person go after your personal assets, be it your car, your house, your personal savings account, your checking account, your retirement account. So simply stated, by placing a business that you're running into a corporation or an LLC, it's creating this corporate shield around you as the business owner, and it's preventing someone from coming after your personal assets and any type of personal assets you own, because it's now a separate legal entity. In addition, you may get added credibility. Oftentimes when you're dealing with your clients and vendors, when a person sees that INC or LLC next to your corporate name, they're more likely to want to do business with you because they look at you as more of an established type of a business. There's also perpetual existence with a corporation or an LLC because of the fact that a corporation or an LLC is a separate legal entity on its own, and it goes on and on forever, even if one of the business owner passes away, and it has to be formally dissolved or closed down before it kind of decimates or vanishes. Unlike, for example, a sole proprietorship or partnership that we're going to go over, corporations and LLCs are separate legal entities that, unless they're formally dissolved, they will continue on forever and ever. And the other thing is that there's more tax flexibility with a corporation or an LLC because of the fact that you get to create this formal business entity and it's a separate legal entity. There's more likely opportunity of tax deductions, and you may be getting better tax implications by running a business as a corporation or an LLC. So before we dive into the actual corporation or an LLC, I want to go ahead and summarize the different types of entity options. So for a small business owner, there's a sole proprietorship, there's a general partnership, the limited partnership, the C corporation, the S corporation, the LLC, and the professional corporation. For purposes of this webinar, we're going to go ahead and focus on the sole prop and the partnership, the C Corp, S Corp, and the LLC. For those of you who may need more information on the other types of entity, feel free to either visit our website or send send an email to me and I'd be more than happy to go over it for you. Why is, selecting a business entity so important, and why do we need to select the business entity that's right for our business? Because it can definitely impact the future success of your business. It really it is important, because by creating that business entity, you get to decide who qualifies to own the company, what must be done to transfer ownership of a company, the taxes the company is subject to, the ability to obtain credit and finding and attracting, venture capital, you as the business owner's personal liabilities at stake here, and also the number of ongoing compliance requirements. So, when you're considering the type of business entity you want to choose for your particular business, what you want to consider is where the business will be conducted, wanting to have limited personal liability for business activities. And we can advance the slide here. Wanting to have limited personal liability for the business activities, and if your personal assets are at stake here, whether the business will have partners, the company's expected earnings, business goals, and how much it's going to cost to set up that formal business entity, and whether you as a business owner have the tolerance for paperwork and compliance formalities, and whether you as a business owner have the desire to minimize self-employment tax obligations. So with that said, we're going to go over the different types of business entities. And the first one that I want to go over with you is the sole proprietorship partnership. Again, very simple to form and maintain. A sole proprietorship or partnership is basically you as a sole proprietor, one person as a sole proprietor, or two or more people, hence a partnership, doing business either under their own business name or under a fictitious business name. It is very simple to form and maintain. There is no financial statements or lengthy paperwork to stay compliant. It's very simple to tax, as income earned by the business is considered income earned by the owner. There's no separation of personal and business assets. So a sole proprietorship or partnership does not offer you any sort of liability protection or asset protection, because you are the business. You and your partner in the form of a partnership are the business. So anything you own could possibly be at stake. Owners generally have to sign contracts and paperwork in their own name because the business does not have a separate identity under the law. And with a sole proprietorship or a partnership, it's really hard to establish credit, take out loans, or raise capital, because you as the business owner will have to sign a personal guarantee. And if you don't have business credit, it's going to be really hard. So in essence, that's sole proprietorships and partnerships. What I want you to take away from it is that there is no asset protection or liability protection, because it's not a separate legal entity. Now we get into the business structures that do offer asset protection and liability protection, and they are a separate business entity. We're going to start out with the C corporation. The C corporation, also referred to as a general for-profit corporation, is a separate legal taxable entity separate from its owners. Generally speaking, the owners of that C corporation or any type of a corporation are called the shareholders of the corporation. With a C corporation, it's the most formal type of entity there is, and it comes with a lot of corporate formalities. However, with those corporate formalities also come a lot of protection, and it's a separate legal entity. You'll often hear a C corporation's income tax treatment referred to as double taxation, because with the C corporation, not a type of entity that we typically recommend for a small business owner, because you have that issue of double taxation. Generally with a C corp, the corporation pays taxes on its profit, and then the individual shareholders will pay taxes on the dividend income they receive from the corporation in the form of a distribution, hence double taxation. The corporation gets taxed once at the corporate level, And then when the corporation pays out dividends to its shareholders, which are the owners of the corporation, the shareholders get taxed again at their individual tax bracket. So even though forming a C corporation may have a lot of, more compliance formalities and more legalities and formalities, in light of how easy it is these days to form a corporation online, for some business owners, it may make sense in light of the recent tax cut that was passed back in 2017, where now C corporations are taxed at a flat 21% rate. So in some cases, for that business owner who may not qualify as an S corporation and really needs that liability protection in that separate legal taxable entity, a C corporation may be the best way to go. And again, this boils down to that business owner receiving that financial advice from their CPA. On to the next slide, let's talk about the LLC. So how I like to refer to the LLC is that you get to have your cake and eat it too. The LLC takes elements of a corporation and mixes it with elements of a sole proprietorship partnership. Basically, you get all the liability protection, asset protection, that separate legal entity that a corporation will offer you without all the corporate formalities. Generally speaking, an LLC is operated by one piece of document, which is the LLC operating agreement. And the LLC, again, gives you all the liability and asset protection without all those formalities, because the single piece of document that controls that LLC and controls the relationship of the members of the LLC to the LLC, and amongst the members are the owners of an LLC, is the operating agreement. So because an LLC in some cases, in some senses, is looked upon as a separate legal entity from its members, its financial and legal responsibilities are also its own. Because why? That LLC is a separate legal entity. However, for tax purposes, LLCs are a little bit different in a tax sense from that corporation. An LLC, typically, if it's a one-member LLC, by default, it's taxed as a sole proprietorship. Hence, it's looked upon and considered as a disregarded entity. And if it's two or more members in that LLC, by default, it's taxed as a partnership. So those are where the elements of the sole proprietorship or partnership come in. Let's move on to the next slide. And we talk about the S corporation. Now, what's the S corporation? Well, the S corporation is not a form of entity. It's basically a tax designation that can be given to a corporation or an LLC. And why do we have this tax designation? Because of this whole thing of this whole idea of double taxation that C corporations have. The IRS came up with this election whereby business owners can have the option to elect S corporation taxation for a C corporation to avoid double tax treatment. So if the directors of that C corporation qualify, then and meet the IRS guidelines that are given to qualify as an S corporation, that C corp can elect S corp status, and for purposes of taxation, that C corporation is now treated as a pass-through tax entity. Which means what? It means all the profits and losses of that corporation pass through and are reported on those individual shareholders' tax returns, thereby avoiding double taxation. Similarly, an LLC can also opt to elect S corporation. Now, a lot of you may wonder, well, why would an LLC elect to want to become an S corp? An LLC is already a pass-through entity, and that is correct. However, an LLC by default cannot, members of an LLC cannot take a paycheck from the LLC. And generally speaking, by default, members of an LLC are going to be subject to higher self-employment taxes. And this is because by default, a single member LLC is taxed as a sole proprietorship and a multi-member LLC is taxed as a partnership. So hence, the only way a member of an LLC can take money out of the LLC and pay themselves is in the form of a draw. And when you take a draw out of your business, you're going to have to pay higher self-employment taxes. So there is a way around this. The IRS allows an LLC to elect S corporation status if they qualify, and now have, for tax purposes, have that LLC treated as an S corporation. This way, members of that LLC can now go on payroll and take a paycheck from that LLC, limiting their self-employment taxes. Now, there is strict requirements as to who can become an S corporation. You have to be a US resident or an alien. You can have only up to 100 members or shareholders, and you have to make that election within 75 days of that business coming into existence. Moving on to the next slide. We've gone ahead and summarized the different types of entities here for your reference. So we'll move on to this slide that talks about what do you ask yourself, questions to ask yourself when it comes to which type of entity you want to choose. And one of the things you want to consider is, okay, what are the initial filing requirements? What are the annual compliance requirements? How much is it going to cost me? As you can see with the sole prop, there's really not many requirements, similar to the general partnership. Whereas as you go down the line, the filing requirements increase, so do the annual compliance requirements, and there is this requirement of designating an agent for service of process when you're dealing with any sort of a separate legal entity, such as an LLC or a corporation. Now, the questions you want to ask yourself when it comes to choosing which type of an entity you want to designate for your business is, you know, if you have personal assets, if you're concerned about personal liability, and really, do you want to live off the business's profits each year? Do you want to keep administrative costs to a minimum as possible? And do you want to keep the business forever, or is this something that you have an exit plan? Moving on to the next slide, we're going to talk about tax advantages and disadvantages of all of the different business entities, and we can move to the next slide after here. Again, we've covered this with the C Corp. The advantages are that you are creating a separate legal taxable entity, and in some cases, for some business owners that don't qualify for that S corporation, the tax rate for a C Corp is a flat tax of a 21%, so that may be beneficial. And there's possibly more tax deduction opportunities. And for C corporations who may qualify, they can avoid that double tax by qualifying to become an S Corp for purposes of taxes. Again, the disadvantage for C corporations is that double tax hit, because for C corporations who do not or cannot qualify to become an S Corp, there is that double tax hit, which is typically they pay a tax at the corporate level, and then again, when it pay a distribution to their shareholders, they're getting taxed again on that individual shareholders level. Now, the S corporation tax advantages and disadvantages. With the S Corp, for LLCs, as we mentioned, it lessens the self-employment tax burden when it's an LLC, because that LLC member is now eligible to become an employee of that LLC and take a paycheck, okay? And then for C corporations, as we discussed, it enables C corporations to avoid double taxation. So dividend income paid to shareholders is not subject to self-employment tax, and those monies that the C corporation pays out as a distribution are taxed once at the individual shareholders level, and they're taxed at that individual shareholders tax bracket. Now, the disadvantage of an S corporation is the fact that there's certain limitations as to who can qualify for an S corp. It may limit growth potential. S corps can't have more than 100 members or shareholders. There's that reasonable compensation key where it's a huge red flag for the IRS if you are an S corp and the owners or shareholders of that S corp or members of that LLC that have elected S corp election for that LLC don't take a reasonable salary. And keep in mind, S corporations are not equally treated at the state level. So there is that state level component. Last but not least, with the S corporation, again, there's strict requirements as to who qualifies. And if you are not a US resident or an alien, you can't qualify to become an S corp. Now, there's lots of advantages with the LLC. Again, single member LLCs are taxed as a sole prop by default. Multi-members are taxed by default as a partnership. LLC members may elect to have their LLC treated as an S corporation for tax purposes if they want to avoid paying higher self-employment taxes. And also, another advantage is that owners choose how to distribute profits within an LLC. And this is another great advantage of the LLC, so that you can actually equally be a member in an LLC. And for example, one member can provide sweat equity in the form of work, whereas another member can provide actual money into the LLC and still have equal profits with an LLC or, unequal profits. So you get to choose by setting it within that operating agreement how to distribute profits within an LLC amongst the members of that LLC. The disadvantages of the LLC is that, again, by default, for an LLC that's not electing to be taxed as an S corp or a C corp, bigger self-employment tax burden, and members of an LLC, because members of an LLC cannot be employees of an LLC, and they can only take a draw out of an LLC. So what does that mean? They're going to be subject to higher self-employment taxes. Moving on to the next slide. Now, the question becomes choosing the state of incorporation and where can I incorporate? So we have a little bit of time left, and just to make sure, I'm thinking I have 15 more minutes or less. Please let me know.
Yeah, that's fine.
Okay, so one of the questions, once we decide where, what type of business entity we want to set up for our business, the next question becomes, where do I set up that business? Where do I set up that corporation? Where do I set up that LLC? As a general rule of thumb, in light of the hype about business-friendly states like Delaware, Nevada, or Wyoming, the general rule of thumb is incorporate or set up that LLC or set up that business structure in the place that you're physically located, your business is physically located. And the reason for this is because, yes, there are business-friendly states that provide better tax benefits. Some states, you're not required to pay any state income tax. However, here's the problem. If you're living in the state of California and your business is in California and you set up that business in the state of Delaware, you're now subjecting your business and the filing requirements to two states. Not only you're going to have to keep up with Delaware or Wyoming or Nevada or wherever you filed, thinking that you're going to get a better tax advantage. However, wherever your home state is and wherever you have nexus for your business, which is connection as far as business transactions, that business's states, laws and fees and filings are also going to apply to you as well. So the general rule of thumb here is that you must consider setting up that business where there is nexus, where there is income tax nexus, where there is physical nexus, such as where the offices are located, employees are located, the shareholders are located. that's where the majority of the business is being conducted. And that's really the rule of thumb is if you're a small business with less than 10 employees, the best consideration for you is to set up that business in the state where the majority of the business transactions are. So we can go through and these slides are available for download for you. I want to cover the steps to get started. So we've talked about the different business structures. We've talked about the tax considerations when it comes to the different business entities. I've given you the general rule of thumb when it comes to where to set up the business. And we've talked a little bit about Nexus. A lot of you may wonder what is Nexus. And when I talk about Nexus, it implies where the company has connection to that state. So Nexus comes into consideration when we're deciding where to form that corporation or LLC. And there is no specific shared definition of Nexus across all the 50 states because every state's Nexus rules vary from one state to another. However, in general, you want to set up that entity in you want to set up that business in the state where it has Nexus. And when we talk about Nexus, as I mentioned, where that business has physical presence, like an office, a store, or warehouse, and where the majority of the economic activity of that business is being transacted. And that's the general rule of thumb. Now, let's talk about how to set up that corporation or LLC. When you're wanting to form a corporation or an LLC, generally the governmental entity that brings a corporation or entity into existence is the Secretary of State's office in the state where you want to formalize that business entity. And there's typically about 10 steps that you would take in forming a corporation or an LLC. And all of these steps and more can also be taken care of if you retain the help of a legal document filing service such as our company. However, you can do this on your own. Generally speaking, you would check the name for availability, determine what type of business entity you want to create, designate a registered agent for service of process, which is basically a person over the age of majority that you would designate for that corporation or LLC who would accept service of process on behalf of that corporation or LLC Monday through Fridays during normal business hours. Once you have all of those, then you would prepare and draft the articles of incorporation for corporation. They are called articles of organization for an LLC, and you would submit that paperwork along with the filing fee that's required by that state to the Secretary of State's office. You would wait until you get the stamped filed documents back with an effective filing date from the Secretary of State's office. Then you would draft the corporate bylaws or the operating agreement for a corporation or an LLC. You would obtain that employer tax ID number, which is basically the social security number for that corporation or LLC that allows the IRS to identify that corporation or an LLC and be able to verify transactions that are being handled by that corporation or LLC. Generally, an EIN, also referred to as a tax payer's identification number, is generally obtained through the IRS website. And it's like the social security for that corporation or the LLC. Just like the birth of a child, when a corporation or an LLC comes into existence, you have to assign a tax ID to that corporation or an LLC. After that, you would go through the corporate compliance of holding meetings and your first board meeting. If that corporation or LLC or that business requires any type of business licenses or permits, you would want to obtain those. If your corporation or LLC is going to be having employees and paying those employees on payroll, you're going to definitely need to register and set up payroll accounts within the states that you're running payroll, and then maintain ongoing compliance. Now, all of these steps and more, again, are something that you could do on your own, or you can get the assistance or retain the assistance of a legal filing service such as our company, CorpNet, to assist you with these steps and more in all 50 states. Moving on to the next slide. Now, a lot of you may ask, well, what are the steps I take? For example, if my corporation is a C Corp or I have an LLC and I want to elect S Corp status. And here are the steps here presented to you. Again, that entity has to be established as a C Corp or an LLC before it can elect S Corp status. Then you would have to, if all the shareholders or the LLC members basically qualify and meet the requirements of the S Corporation status, then everyone would fill out IRS Form 2553. It would be signed by all the shareholders or the members, and then that would be submitted to the IRS, and then the IRS will send you an approval letter. And once you receive that approval letter, then that corporation or LLC can be taxed as an S corporation. Moving on to the next slide. Now, what the question is, well, Nellie, I have a lot of clients who come in and they're like, well, I am a corporation or I am an LLC, but now I think I need to convert it from one entity to another. If you have an existing business and you, for some sort of a reason, whether maybe the business climate of your business changed, or maybe you'll be able to get better tax benefits by being one business entity, one sort of business entity as opposed to another, then what you're looking for is to convert that business entity type. And for purposes of timing, I'm just gonna really simplify it down for you. If you're a sole proprietorship or a partnership and you're trying to change that business structure over to a corporation or an LLC, there is no conversion required. You simply close down that sole proprietorship or partnership and you form a new corporation or an LLC. If you are a corporation or an LLC and, for example, want to elect S corporation tax treatment, again, there is no conversion required. You simply have to draft IRS Form 2553. As long as the IRS grants you the election and you meet those requirements, again, there is no conversion required. A conversion only comes into play when a corporation is trying to convert into an LLC, or an LLC is trying to convert to a C corporation. Again, I'm going to repeat this. A conversion only comes into play or becomes the subject matter of, something you need to do. It's only required when you have an existing corporation and you want to switch that corporation to an LLC, or vice versa. If you have an existing LLC and you want to convert that LLC over to a C corporation. So that's where a conversion comes into play. And if that's the case, then again, articles of conversion would be filed with that state to make that conversion happen. Now, conversions are not recognized by all 50 states. So in some states, if they don't recognize conversions and you still want to convert, you may have to close down that original business entity by doing a formal dissolution and then forming that new business entity from scratch. Moving on to the next slides, and I've covered all of these, Warren, so we can actually go to, let's advance. I've covered all of these. We can go through. So let's talk about the helpful resources here, and then I'm going to open it up to Q&As. Again, I don't want to, I want to stress here that mainly the purpose of this webinar for me is, again, educating all of you. And, we do have a company that can help you with all of this and more. And we have a plethora of tools and resources. If you need to check a business name for availability, you can come and do an unlimited search using our business name search tool. It's free of charge. We also have an interactive business structure wizard tool, which if you're uneasy about maybe the decision you've made about a certain type of entity and you want to double check your work, we have an interactive business structure wizard that asks you questions and then leads you through a series of questions and then recommends to you based on the answers you've given to that wizard, the type of entity that would be the best for your business type and your situation. If you have an existing corporation or LLC and you want to keep that corporation or LLC in compliance, we have our CorpNet compliance portal with monitoring tools and proactive alerts where you simply register your existing corporation or LLC within our portal, and then we monitor that corporation or LLC and send you alerts when, for example, your annual report filing is due, or when franchise taxes are coming due for your corporation, or if your LLC or corporation is needing to renew one of their compliance type of filings. We also have for corporations annual meeting minute services. Every corporation, no matter how small you are, even if you're a single person corporation, you are required by law to draft minutes every year for that corporation while that corporation is in existence. Failure to do so may not be a big deal while you're running a corporation. However, if you're ending up in a dispute, in a lawsuit, it's going to become a really, really big sticky point. And if you don't have meeting minutes, it could cause them to pierce the corporate veil, and you may lose that corporate protection, that corporate veil for your corporation or LLC, and they may be able to go after your personal assets. We also have timely blog posts and a plethora of business guides and checklists that you can always come and download free of charge. It's been such an amazing pleasure to present to all of you. And at this time, I'll go ahead and open it up for Q&As. And I think the best way to do the Q&As, Warren, is perhaps so that the rest of our audience can also listen to, would be if you can maybe read out the question or whatever is easiest for you guys.
Well, absolutely. Thank you, Nellie. First of all, I just want to thank you for such a great presentation. It has been strictly educational. Absolutely.
Oh, thank you so much. This is what I love doing. I mean, I don't care what time it is in the morning when you're asking me to come here and do what, anybody, when you're doing what you love, it's not work, and I love this stuff. So it may be boring to some people, but for me, it's really fun.
Well, I can see that we do have a few questions in the Q&A. So yes, we would like to open the floor to address your live questions. If you missed the welcome at the beginning of today's webinar, feel free to drop any of your burning questions into the chat, and we will address as many as possible. So let's see. I
actually can see the questions here.
Okay.
So I can just read them. So we have a question from Erica, and the question is, when setting up an LLC, do you recommend using a virtual address as opposed to a home address? And if so, is there a type or service for obtaining a virtual address that you recommend over another? Great question, Erica. Thank you for joining us today. In answer to your question, generally speaking, it's recommended that, you're one of the reasons why you're forming an LLC to begin with is because you want that added layer of privacy. So, and one of the requirements for an LLC is to designate a registered agent address for that LLC, a designated registered agent for service of process. Now, a service like ours can not only act as that agent for service of process for you, but it also can provide you that virtual address that you're looking for. And what this will do and how this benefits you is, one, it's guaranteed that you're getting any type of service of process from the states. The other is that you're protecting yourself and giving yourself an added layer of privacy when it comes to people kind of getting to you and your home address. And last but not least, we you know, God forbid if you need to move or you know, change that address, you don't have to file additional documents with the state. So you're in essence saving some money, because by designating a commercial agent who's acting as your agent for service of process, you know, you don't have to continually update the state with a new address. So I hope that answers your question. And a commercial agent such as our services at CorpNet can offer it in any state for you. And it's a minimal service fee on an annual basis. We have another question from CJ Dunford, which is, what if there is more than one place that has Nexus? What type of registrations do you recommend? This is a great question. So the question is, what if I have a corporation or an LLC, but I also do business in other states? So I do have a great webinar and presentation that we can just spend 1 hour on how to structure your businesses if you're doing business in multiple states. But in answer to CJ's question, generally speaking, the way you would do this is the corporation or LLC would be set up in the state that the majority of the transactions are taking place. There's physical presence. That would be considered the home state. And then, for example, if that corporation or LLC also has Nexus, let's say in another state or multiple states other than the home state where it's originally set up, we would then encourage that corporation or LLC to foreign qualify within those other states. Now, when we say foreign qualify, we're not talking about anyone being a foreigner here. The term foreign in this instance is strictly talking about your home state being that state where that original corporation or LLC is formed as the domestic state, and then the corporation or LLC as a result of having Nexus in other states, foreign qualifying in those other states. And the process to do this and how to go about doing this is by having that corporation or LLC file what is called a certificate of authority to transact business as a corporation or an LLC in those other states that it has Nexus within. And again, these are all things that a filing company can assist you with, or you can do it directly through the Secretary of State's office in those other states that you have Nexus in. Let's see here. I am hearing that we have time for only one more question. And let's see, are there options for changing an LLC to an S Corp after the 70-month, it's the 75 business day deadline? And this is from another one of our audiences, Pen. And so the question here is, are there options for, so the question here is, the LLC has been formed and that LLC has decided that it wants to elect S corporation status, but it's missed that 75-day deadline. And the question is, can they still qualify as an S Corp? Generally, the answer is that if you miss that 75-day deadline, then you still can qualify to have that LLC treated as an S Corp, but not for that taxable year. So let's say the LLC formed in 2023, okay, and it had 75 days, but it missed that 75-day deadline. You can, that LLC, if it meets the requirements, it still can elect to become an S Corp, but it wouldn't be effective for the 2023 tax year. It would be effective for the 2024 tax year. Now, for example, if the LLC was formed last year and it missed the 75 business day deadline, existing corporations and LLCs have until March 15th of the following tax year to elect S Corp status. So in this case, if your LLC was formed last year and you missed that 75 day deadline, it's 75 days, you do have until March 15th of this year to elect S Corp status for your LLC to be treated as an S Corp for the 2023 tax year. And that's why there's the whole March 15th S Corp deadline that we see coming up often. So again, existing corporations and LLCs that have filed last year and have missed that 75-day deadline have until March 15th of 2023 to elect S Corporation status if they want that S Corporation tax treatment for the 2023 tax year. And that concludes our Q&A session, and I'll hand it back over to you, Warren.
Thank you so much, Nellie. Awesome handling of the Q&A session. Thank you. And providing those great answers to our questions. Thank you for attending Business It's More Than LLCs. This was possible through our work with the SBA Community Navigator Pilot Program, funded in part through a grant with the U.S. Small Business Administration. A tremendous thank you to Nellie Akalp, CEO of CourtNet.com, and thank you to our Community Navigator Chambers for advocating for Black businesses, and to you, our viewers, for sharing in this discussion. USBC Introduced by Black, I just want to advance the slide here. We introduced by Black, the only Black certification program with a business directory providing businesses that certified access to private and public procurement opportunities, highlights, and other benefits. This online program can help prepare you for the contracting space as a documents preparation guide. Certify today by visiting usblackchambers.org/certification. We invite you to give us your feedback on today's session. Just scan the QR code or type in www.surveymonkey.com/r/biz, B-I-Z, future, F-U-T-U-R-E, as you see on the screen. Now, join us for upcoming events by visiting usblackchambers.org webinars to register for topics such as live webinar by Black.us platform for Black-owned businesses, February 8th at 5 p.m. Eastern, and retirement plan options for small businesses, February 9th at 11 a.m. Eastern. And follow us on social media at usblackchambers.org. If today's forum prompted additional questions and interests, feel free to contact us at programs@usblackchambers.org. We thank you for joining us today, and enjoy the rest of your week.